Hello and welcome to Card Trading Mentorship. And in this lecture, we are going to introduce Forex trading from the ground up. And this session is designed especially for beginners, so you don't need any prior experience or knowledge about Forex. So even let's say if you have a little bit experience, still this mentorship is for you. And our purpose here is to understand what Forex really is, how the market works, and why people trade currencies globally. Start with a bit introduction about me. Again, my name is Abu Bakr, and you can call me ABK. I've been into financial market for about 6 years now. So starting with what is Forex or what is Forex trading? Forex stands for Forex exchange. That's what FX means, or Forex trading. And usually you might see people on social media added FX their user or in their name. That's what FX stands for, Forex exchange. So it's a market like any other market, but it's a global market where currencies are bought and sold. And every country has its own currencies. And Forex exists because people, businesses, bank, and government needs to exchange one currency for another. For example, the country you are in, maybe you have your own currency. For let's say I'm Nigerian, so there is Nigerian Naira. And I'm living in Malaysia, they have their own currency, Malaysian Ringgit, MYR. So if I want to change my Nigerian Naira to Malaysia Ringgit, that's what we refer to as Forex exchange. So for us, an individual level, we trade Forex as well, because if you want to convert your currency to another currency, it's the Forex, that one. Because you have to exchange one currency with another. So that's a bit explanation about that. Another thing, which is the last one, Forex is the largest financial market in the world. There are different markets in financial market. For example, there is stock market, there are bonds market, and so many. But the Forex market remains the largest and the most liquid financial market in the world. When we say market is liquid, it means that there is always buy and sell. I mean, there is enough money in the market that when you want to sell something, you just sell it, and when you want to buy something, you can buy it immediately. That's what we mean with liquidity. If you have experience in trading other markets, especially crypto, you might find out sometimes you cannot sell a coin, or you cannot buy some certain coin due to liquidity issue and stuff. But in the Forex market, there is nothing like that. Every time, any moment, you can buy and you can sell. So that's what it means by the liquidity. And moving to the next, who trade Forex and why? I want you to know that mostly we are familiar with the retail trading, the one that we used to see on social media, traders, lifestyle, and everything that you see on your reel. But in reality, what consists of Forex trading is there are so many institutions that place in the market, and especially the central banks, because we are dealing with currency. And central banks are the one responsible for issuing a country's currency. So central banks trade Forex, maybe between governments, between banks, and many other things. And then we have commercial banks, that is like, let's say, JP Morgan Bank, or the local banks that you have in your country, let's say GT Bank, Zenith Bank, Maybank, and so many. That's what we mean by commercial bank. And then the corporation, which are companies, and then the last one, which are the retail traders, you and I. And retail traders, they come into the market because of the presence of internet. I think you can search the date on the Google when retail trading started. And this is you and I, because we don't have much influence on the markets. Forex trading is not created for traders alone. These are also institutions that participate in the market. And then we can see from this diagram how institutions are participating in the market. We have the central banks, in the middle, these ones. And then we have the major banks. The major banks, you can say, are the banks with the largest asset, and usually are banks from China and also the United States. You can Google that one as well. You can see which banks are the major banks in the world. And then here you can see you and I, the retail traders here, retail traders. We are at the, we have the low influence on the market. We can see the institutions or the individual that participate in the forex market and abroad. Why forex exists, and or why do we trade forex? As I mentioned, forex is not created for traders alone. It exists mainly because of there is international trade, that is trade between countries. Like let's say Nigeria want to buy weapon from the United States, so definitely there must be an exchange of currency, because let's say Nigeria is not using United States dollar, it's using its own currency, and the US, they are not using Nigerian naira. So there must be an exchange in between. Nigeria have to exchange their naira into USD in order to buy something from United States. Travel and tourism. For example, if you want to visit somewhere or you want to go for vacation to another country, you have to exchange your currency that you are using into another currency. Let's say you want to travel to Saudi, so you have to change your naira into which currency? Real. Let's say if I'm an exchanger, you give me naira, then I will give you real. So that is buying. I sold my naira and I buy what? I buy real. And then we have foreign investment. This, if you want to buy an asset in another country, then you have to change your currency as well. And also there is global business transaction, especially between big companies or between businesses. They have to change their currency as well. And that's what foreign exchange is. And then the last one is central bank operations. Central bank, they have to change their currency in case of international trade or in case of hedging or any other thing that they need to deal with another currency. So this is why forex market exists, because it deals with our transaction. It's not just for retail traders or for trading alone. Advantages of trading forex. As I mentioned in the beginning of the lecture, I said there is high liquidity in forex and also low barrier to entry. There is better risk management. You can manage your risk, depends on the size or risk that you are willing to take. I think we will go further on this maybe in you can trade anytime you want. What I mean by that is in forex we have 3 trading sessions. Markets start opening during the Asian session, and then we enter the Euro and then US session. And it operates from Monday to Friday, 247. Unlike some market like stock, it operates using working hours, but in forex is 247. You can trade anytime you want, and also there is low transaction cost when trading forex. So these are some of the advantages of trading forex. That's all for today. We will meet in the next lecture where we will continue with new topic. Thank you.